Hey, what's going on YouTube? Welcome back to another video. Today I wanted to do give an update on the Bitcoin dominance and also the chain link video. Um so what you're looking at right here is the daily time frame. The daily time frame ended. So here's the daily candle. On the You can see there's a channel right here. There's two touches on the bottom, on the top border and the lower border, and we closed below the 50%. We touched the 261 Fibonacci level here. You can see right here the 161 and the 261 resistance. 261, each Fibonacci level is a resistance zone. So we touched the 160, broke out of the 161, and we touched these 261, and then we retraced. There was over here, there was a bull divergence that I already played, which is this move right here, and then another bearish divergence that was developed. You can see right here. Here, look there, up from this point to this point, and then from this point to this point. You can see a bearish divergence, which is what playing right now. The daily candle closed below the 50% of the channel. That means that the altcoins are gonna start to pump a little bit. You can see right here. The next support, or I guess the next support level, retrace the next retrace zone is over here in the blue box, is where either we're gonna come down here and then bounce back up, or if we break under the 70%, the 78% of Fibonacci level, which is below this trend line right here. If you look at the 4 hour time frame, you can see there's a trend line over here. So if we break under this trend line, which is the same thing as the 78% level, then we are going to hit the first Fibonacci 161 support level, zone, actually, the on 161, and which aligns perfectly with the bottom border of the channel right here. So either something like this, come down here, retrace down here to the blue box, develop a hammer candle and bounce back up, or continue, if it goes below the trend line, if it closes below that trend line, then it will continue down to the 161 level, which is the same thing as the bottom level of the channel. Okay. So you can see also that we are below the 50% of the channel. So you can see that the altcoins are pumping a little bit. Next, I want to take a quick look at the Bitcoin chart. So on the daily time frame, we retraced. It was this move right here back in May. So we retraced down, we broke out of the below the 161 Fibonacci level. Actually, we broke below the 61 Fibonacci level. We tried to make it, we tried to test it again. Failed to break out. We came down to the 161 level right here. Came down to the 161 level. Failed. Okay. We failed that level. Once we failed the 161, you're almost guaranteed that you're gonna go for the next Fibonacci zone, which is the 261. Any coin or any stock that breaks below the a Fibonacci level, it's almost guaranteed that it's gonna go to the next level. So we touched the 261 Fibonacci level right here, and let me just put the date. This is the 361 level. These are possible targets if we fail the 261. Okay, so we broke under the 161 Fibonacci level. We tested the 261 level twice, and we went back to test the rebound zone right here. We tested the rebound zone. We failed to break out of it to test the 161 again. Okay. Had we actually broke this level, we would have went for the 161. If we had broke, all right, we failed this level. Right here, the 61, the 618 Fibonacci level right here. Okay, let's call it rebound zone. We went in, failed the 161, touched the 261. We tested the rebound zone, which is the 618 Fibonacci level right here. We failed to break it. Okay. Had we actually broke out of the rebound zone, we would have went to test the 161 level, right? The 161 level. Okay. Let's see, we failed this trend line. So right now, I'm trying to see the next target. If Bitcoin goes down, Bitcoin goes down, the next target is the 161. This level right here. Okay, yes. All right. So the most recent pump right here from 28,800 to 3,500 and some change. Okay. So you can see that this Fibonacci level 161 of this swing right here falls perfectly inside the last pump swing. Okay. So if we fail this level right here, let's call where we are right now, we are at the retrace zone level. This is my 78 Fibonacci level, 78%. Okay. It seems like it's making a bounce. The daily candle right here is this is the last daily candle right here that just closed. We closed right on the retrace zone. Retrace zone 625. Testing my 78 Fibonacci level support on the daily. 625. If we fail that level, then the next target is right here. So this is my 161 of that last swing, and 261. W for week time frame. And you could also see that the the 261 level right here. Okay, the 261 of this move right here, which is this right here, falls perfectly inside the 361 of this level right here, of this move. So if we fail the retrace zone, close under the 78, then we're most likely to hit the 161 level. If we close under this level right here, then we are more than likely to short. The move would be short to the 261 level. Okay, and it could actually spill or extend to the 261 of this move right here. Okay, so possible targets if we close under the 78%, the 78% line is 1 target, 2 target, second target. Okay, now if we bounce from the retrace zone right here, first of all, we have our first resistance box right here, and we need to close above the resistance, the rebound box, in order to go higher high. This. So first target of the 161 would be this box, and second target would be this box. All right. We don't need this anymore. So a bounce from this retrace zone, the yellow box, will take us back to test the rebound zone. Okay. Now, I like to double check with the moving average to confirm the boxes. And let me just right here. Here we go. There. So confirm with the moving average on the daily time frame. So okay. So the orange line is my 21 EMA, and you can see right here it's the first resistance level. If we retrace above White line is my daily moving average, which is basically the standard deviation of all the previous previous daily candles. Usually a close below the daily moving average is an automatic short, and a close above the daily moving average is an automatic long. Close below. Okay, there's my daily 21 EMA, and I like to put the date and my 50 EMA. Yellow line is my 50 EMA. Purple is my 200 EMA. I have two purple lines. One is for 200 and one is for 233, which is another Fibonacci level. Another Fibonacci level, excuse me. And the blue line is the 150 exponential moving average. So below the retrace box is a bearish close. That means prepare your short, right? So now you have your levels. Your yellow box, a close below the yellow box means a short, and most likely we're gonna hit the 161. And if we close below the 161, then we're more likely to go to the 261. If we close above the daily pivot, which is this red line right here, then we're gonna go test the rebound zone. If we close above the rebound zone, then we're more likely to test the daily 50 EMA. And if we can close above the previous daily 161, then we are likely to go back and test the 161 levels again. So let me check the 4-hour time frame. Let's see, where are we? Four-hour. The 161 of this move right here, the 161 of this move right here, is above the daily rebound zone, which is a good sign. Because usually, if we can close above the rebound zone of a Fibonacci swing, then we're more than likely to go to the 161 level. And since this 161 on the 4-hour time frame is above the daily rebound zone, that's a good sign that we're gonna close above the daily rebound zone, or we're gonna go break out of the rebound daily rebound zone and test the top border 4 hour, my 4 hour level 261, and my 161, 161 4 hour. Okay, so here, four-hour bullish close, a good sign that we're gonna. All right. Yeah, you can see this resistance line right here. You have 1, 2, 3 touches. We broke out of it, went to the rebound zone, tested the retrace box, the yellow box. So if we fail this level right here, we go back under the resistance line and we go and test the 161. Maybe come back, test the 61 Fibonacci level, and then retrace back to the 261. Let me see if we have any divergence. So over here, 1, 2, that was a bearish divergence already played right here between these two points, and it already played. We came down right now. I have a small bearish divergence from this point to this point and this point right here, and that's why we have this retrace over here. We already retraced to the yellow box. Some people are probably longing from this box right here. And check the 4 hour. 4-hour bearish divergence already played. Down, up. Okay, already down here played. So it depends on the 4-hour candle close. This may develop a bullish divergence up here, right? And it could go back up. Up, down, and up, come back down. If you take between here and here, there's no divergence. There's up and down. We made a bearish divergence move right here. Move it down and up. Let's check on the dominance. Okay, so dominance is bouncing back on the 2-hour time frame. There's a hammer right there, which is a sign of going up. So if Bitcoin dominance goes up, then alts will go down automatically. Possible targets are back here. $161. Right, of this move right here. So it can go back above the 50% of the channel. If it goes above the 50% of the channel, then the first target will be here. $161, which is $161 of this swing right here, but $261 of this swing right here. There's the 261 of the bigger move. Okay. 161, 25. So 161, 261, 361 of this move right here is right on the top of the channel. There, right on top, right on the top of the channel right here. So $261 of this move, 161 of this move right here. So if we close back above the 50% of the channel, $161, $261 of the 4-hour time frame is inside the $161 of the bigger move. And this is the weekly move right here. This whole move right here, the 161 is right on top of the border of the channel. So which this move and this move falls right inside of it. Delete this and delete this. So here, if we go back above the 50% of the channel, we are gonna go to this box right here, 161, 261. Most likely the 261, which is with the 161 of this move right here. So either gonna go to the 261. Obviously, at this point, the alts are bleeding, and we're gonna retrace back down and then up. I'm not seeing any. Let's see if there's any divergence on. Mm, Nothing on the 4-hour or the daily. Mm, Up, down, up, up, down. A little bit of a bullish divergence on the 3-hour. The and the 2-hour right there. Developing. Let's see, Bitcoin. Still at the retrace box. So now you have your target. So if we close above the retrace box, we close above the retrace box. You can long over here first scenario is your first target is your 35,000, and your stop loss would be right below the 78% support. Okay. And for a 2.0 risk reward ratio, that's a good move. Okay. Or you can hedge fund open a long over here and open a short right here, where your stop loss would be right above the 4-hour rebound zone, and your short first target would be down under here for a 2.6 risk reward ratio. All right, so that's all for this video. I know it was long. If you like this video, please feel free to subscribe and give a like. If you have any requests for any coins or stocks that you would like me to chart, just please leave it down in the comments below, and I'll see you guys in the next video. Thanks for watching.